Welcome back. Today, we are conducting a massive institutional-grade financial deep dive into UnitedHealth Group following their recent performance reports and market movements. Before we break down every chart in extreme detail, please take a moment to like this video and subscribe to the channel for more professional financial analysis. Let's begin. UnitedHealth Group, trading under the ticker UNH on the New York Stock Exchange, currently stands as a titan in the global healthcare services and insurance landscape. At a recent closing price of $277.15, we are observing a market that is weighing significant scale against evolving regulatory environments. The stock's recent daily decline of nearly 3% highlights the sensitivity of the healthcare sector to broader policy shifts and medical cost trends. However, to understand the long-term investment case for UNH, one must look beyond the daily volatility and into the core pillars of the business. The TradingView header acts as our gateway to a multi-layered financial machine encompassing both the massive UnitedHealthcare insurance operations and the fast-growing Optum Health Services platform. This synergy between insurance and direct care delivery is the bedrock of UnitedHealth's competitive moat, allowing it to manage costs more effectively than its peers. As we progress through this exhaustive analysis, keep in mind that UNH is a bellwether for the U.S. healthcare system. Our goal today is to provide institutional clarity on why this firm remains a cornerstone of global portfolios, analyzing its revenue, segments, and cash flow in unprecedented depth. The regional and segment performance data reveals the staggering scale of UnitedHealth's annual revenue engine, which generated over $447 billion last year. The UnitedHealthcare segment remains the primary volume driver, contributing a massive $344.90 billion to the top line. This reflects the core insurance business providing coverage to millions of members. However, the higher margin growth story is found within the Optum segments. Optum Rx generated $57.85 billion, Optum Health added $38.34 billion, and Optum Insight contributed $6.47 billion. These Optum divisions are critical as they provide a more diversified, services-led revenue stream that complements the traditional insurance model. Geographically, the United States is the undisputed fortress for the firm, accounting for the vast majority of its $447 billion total. The bar chart from 2019 to 2025 illustrates an incredibly consistent growth trajectory. UnitedHealth is defining the healthcare market through this integration of services and coverage. The steady rise across every source of income shows a disciplined operator capable of scaling a massive organization while maintaining a lead in innovation. This segment diversification is key to shielding the company from specific regulatory risks in any single subsector. Examining the quarterly revenue performance, UnitedHealth Group demonstrates a remarkable track record of meeting high market expectations. For the most recent period, the reported revenue reached $113.22 billion. While the surprise metrics show a very modest variance against initial estimates, the overall trend since early 2024 remains overwhelmingly positive. Reported figures have climbed steadily from $99.8 billion to current levels north of $113 billion. This type of reliable top-line growth is what attracts significant institutional capital. Comparing the quarterly bars, we see a consistent step up in volume, reflecting the company's successful capture of increased healthcare spending and the expansion of its service platforms. The market rewards this predictability because the absolute scale of revenue growth remains a dominant force in the sector. Looking forward, the revenue forecast into 2027 remains aggressive, with projections pointing toward a path that stays comfortably above the $110 billion per quarter mark. This predictability is a hallmark of management's deep visibility into the long-term sales pipeline of both UnitedHealthcare and Optum. As revenue continues to scale, investor focus will intensify on how effectively this volume is converted into bottom-line earnings and operational leverage. The earnings per share story for UnitedHealth Group provides a clear view into its operational leverage and profit efficiency. In the last quarter, the company reported an EPS of $2.11, meeting the consensus estimate with a slight beat. While the surprise was modest, It continues a pattern of delivering results even while managing significant external headwinds. Revenue for the same period was a massive $113 billion, showing that the firm can maintain control over its margins at scale. For the upcoming Q1 of 2026, analysts are projecting a significant jump in EPS to $6.81. This jump likely reflects seasonal trends where healthcare companies see higher profitability in the early part of the year following enrollment cycles. The market is closely watching to see if UNH can deliver on this aggressive 6.81 target. Success here would further solidify the reputation of the management team as best-in-class operators. The bar chart history shows a company that delivers consistent results despite the complexities of the global healthcare environment. The synergy between revenue growth and earnings per share is the primary driver of valuation. Investors are looking for profitable scale, and this data confirms UNH is delivering. UnitedHealth Group's dividend policy is a testament to its financial maturity and commitment to shareholder returns. The most recent dividend was reported at $2.21 per share, representing a reliable income stream. Currently, the dividend yield stands at 3.15%, which is attractive for a company that still offers significant growth through its Optum service arms. The total annual dividend has reached $8.73, with a yield of 2.64% based on fiscal year metrics. The bar chart from 2021 to 2025 shows a clear and disciplined upward trajectory in payments. This consistent growth is exactly what dividend growth investors look for, as it signals highly predictable cash flows. A rising dividend is often the best indicator of management's confidence in the future. The trend line for the yield also shows a marked increase, making the company an even more significant component of income-focused portfolios. In an environment where many tech stocks hoard cash, UNH's ability to fund massive expansion while simultaneously raising its dividend is a rare feat. This profile provides a solid floor for the stock price and reinforces the narrative of a stable, institutional-grade asset for long-term compounding. Analyzing the key financial stats and ratios, we see the metrics that define UnitedHealth's valuation profile. The price-to-earnings ratio currently sits at 25.02. For a company of this scale, a PE of 25 is a fair valuation, reflecting its autism growth and essential role in the healthcare infrastructure. It positions the stock as a core holding for institutional funds seeking stability. Additionally, the price-to-cash flow ratio stands at 15.25. This is a critical metric because it highlights how efficiently the company generates actual liquidity. A ratio of 15 suggests the company is trading at a very reasonable multiple relative to the cash it pulls in, which is often a more reliable indicator of value than accounting earnings. The bar charts from 2024 through 2025 illustrate relatively stable valuation metrics even as revenue and earnings climb. This stability is highly prized because it reduces the likelihood of sudden multiple compression. The market has found the valuation floor for UNH, and the price tends to move in line with fundamental performance. By maintaining consistent ratios across multiple years, UnitedHealth has proven it can handle increased volume without sacrificing its core operational efficiency. This is the mark of a mature operator. Cash flow is the lifeblood of UnitedHealth Group, and the data reveals a massive liquidity engine in motion. For the most recent quarter, the company reported available free cash flow of $160 million. While quarterly figures fluctuate, the annual context is more telling. For 2025, the company generated $16.07 billion in cash with an operating cash flow reach of $19.70 billion. This staggering liquidity provides the firepower needed to fund ongoing expansion and strategic acquisitions. Breaking down the components, cash from operating activities reached $1.11 billion in the last quarter. This is the actual cash pulled in from selling insurance and health services. On the investing side, we see an outflow of $2.78 billion, reflecting aggressive reinvestment into Optum technology platforms and care delivery systems. Financing activities showed an outflow of $866 million, representing debt management and dividend payments. This balance between generating massive operating cash and strategically deploying it for growth is a masterclass in capital allocation. With a $20 billion annual operating cash engine, UNH has the flexibility to weather economic storms while continuing to dominate the landscape. The balance sheet provides ultimate evidence of UnitedHealth's stability. Total assets for Q4 25 reached an incredible $313.69 billion. This represents a remarkably stable asset base, with only a slight quarterly decline of 0.50%, showing that the company maintains its massive scale with extreme discipline. On the other side, total liabilities stand at $211.99 billion, while increasing liabilities are often scrutinized in the insurance business. A significant portion consists of reserves for future medical claims, the good debt that allows the company to fulfill its promises to policyholders. Comparing the two bars across the timeline, the relationship between assets and liabilities remains very consistent. UnitedHealth maintains a substantial equity cushion, with assets exceeding liabilities by nearly $100 billion. This fortress balance sheet gives the company flexibility to take on debt for major acquisitions if necessary, or to self-fund internal R&D. A strong financial position is a major competitive advantage, allowing the firm to stay aggressive when others might pull back. For long-term investors, this chart is deeply reassuring, showing a sound business getting stronger every quarter. The summarized financial statement for UnitedHealth Group provides a clear journey from top-line revenue to bottom-line net income. Total revenue for the last quarter reached $113.22 billion. While volume is massive, profit margins in healthcare are often thinner than in software. Operating income reached $380 million. Pre-tax income showed a temporary loss in this specific snapshot, likely due to one-time non-operating charges or legal settlements that can distort quarterly figures. Despite this, the final net income was reported at $10 million. For a company of this scale, such a tight margin in a single quarter is a signal of the high-stakes environment in which it operates. However, when looking at the bar chart history, we see that UNH typically maintains a much more robust profit profile. The key takeaway is the company's ability to consistently generate over $100 billion in revenue every single quarter. This volume is the foundation upon which its service expansion is built. As the company continues to leverage its Optum platform to drive better outcomes and lower costs, more of this massive revenue will flow down to net income. This is a story of disciplined management. The financial health of UnitedHealth's insurance division is summarized in this critical look at premiums and claims. Premiums earned reached $88.81 billion in the latest period. This is the core revenue coming from policyholders. On the other side, insurance claims reached $66.04 billion. This relationship between premiums earned and claims paid is the heartbeat of any insurance company. A healthy gap between these two figures, over $22 billion here, is what allows the company to fund its operations and generate profit. The bar chart history illustrates a very stable and predictable trend in premium growth and claim management. This consistency is exactly what the market rewards, as it suggests that UnitedHealth's actuaries have an excellent grip on the medical cost environment. In an industry where a sudden spike in costs can devastate earnings, UNH's ability to maintain a steady ratio is its greatest strength. This stability is driven by the integration of Optum services, which manage patient care more efficiently. For investors, this chart is the proof of risk management excellence, showing a company that reliably manages the medical needs of its millions of members. Finally, let's examine the valuation ratio trends, summarizing how the market has priced UnitedHealth Group. The PE ratio is currently at 25.02, while the PS ratio stands at 0.67. A PS of less than 1 is common for high-volume companies with relatively low net margins. It suggests the market values each dollar of UNH revenue at 67 cents, reflecting the competitive nature of the insurance space. The trend lines for both PE and PS show a level of stability that is rare today. After a period of fluctuation, the ratios have leveled off, suggesting that the market has found a sustainable valuation for the firm. This stability is a massive positive for long-term investors, as it indicates the stock is no longer subject to wild multiple expansion or contraction. Instead, the price will likely move in direct proportion to its ability to grow revenue and earnings. The slight upward tick in the latest quarter reflects investor confidence in future growth through Optum. In summary, these ratios define UnitedHealth as a stable, high-volume growth leader that is fairly priced for its dominant position. UnitedHealth Group remains a titan of industry, ready to lead for years to come. That concludes our exhaustive, deep dive analysis of UnitedHealth Group. The data shows a massive, disciplined organization with a fortress balance sheet and a clear lead in healthcare services. What are your thoughts on UNH's future? Is its integration model enough to sustain its lead? Let us know in the comments below. Don't forget to like and subscribe for more. Thanks for watching.